Hi,
Hey,
hi everybody. Um, so this is Thursdays, June 12th, and this is a Bitcoin Live with the Power Law and the Minotaur team. We just came back from the conference. I mean, it was a little bit some time ago. We already had a show where we describe it, but it was quite nice to meet a lot of you at the conference. Um, Anyway, yeah, let's start with our usual analysis.
yeah,
So I will share my chart.
the market's having a bit of a dump right now, which is good.
Yeah. So it's in fact actually, do you want to comment on that, on how we usually think about this kind of stuff during during a retracement like this?
Yeah, I can bring up some charts while you're getting yours ready. Let's have a look. I just did a post on this, so if you want to,
Yeah. We
maybe
can go back to my chart just a second. Let me switch it. Um, they change all the time the setup of Restream. This is confusing to me. All right, I'm going to switch off mine and switch on yours. Go ahead, Costa.
yeah, cool. This is pretty cool, this conversation, because it kind of works in fractals as well. So we're looking at what's going on right now in the moment. Marcus is going to tell us what's going to happen in the next sort of few weeks, and Giovanni can tell us what's happening in the broadest perspective. But right now, I don't know, Blinken, you missed it. This was almost a few minutes ago. So the rally that happened a few days ago, we managed to take profit on a bunch of positions, and this is just a really good example of how algorithmic strategies work and how precise they are. I was sitting in my office, getting ready, having a coffee, and look at this, look at this dump here. Look at the size of that when you stretch it right out, and look how that was bought there. So that's all executed, completely hands free. These kind of dumps, they're built into the engineering that we do, and they pick them up beautifully. So I guess it's just a really nice live example of how algorithms are really going to be superior to any kind of discretionary trade. Really, if you have a look at even just the timing of these trades all put together, 11:30 in the morning, 4:30 in the morning, and then midnight. You know, these are trades that are impossible to make discretionary. And in the next few hours, Marcus can give a bit of insight, but I think we're going to bounce at some point. We might already be up at this level before we even know it. If we go down, we're going to just DCA further using our strategy. So this is just a really good example there. I've also got it on the longer time frame. So this is the more high frequency version that we're using at the moment for these calls. But even on the sh- on the larger take profit, larger frequency calls, you can see here we're into the exact same position. So they've picked it up there as well.
Yeah,
And
it was cool because I I was watching this correction today. I thought, okay, maybe the market is going down even more, and in the past, of course, right, this is what Bitcoin does all the time, so there is nothing to worry. But you want to see the price going up, in particular during the bull market. But now I actually almost
like,
like it more when it corrects, because I know then when it goes up, it's up a few $1,000s. But
yeah,
I used to buy Bitcoin again, because that is my goal. I'm not interested in the cash that the algo produces, but I'm interested in converting that cash into further Bitcoin. It makes me feel good that I'm
true.
just by owning Bitcoin, I get more Bitcoin. But
That's right.
it's not what you do if you just hodl. And I was getting ready for the show. I was doing other things, and I keep my headphones and TradingView as a bell when there is a trade, and I hear the little bell say, "Aha, price went down." And these are really cool because when I'm working, etc., I know when the algo is doing something. If I, of course, if I sleep, that is one of the advantages, right? Because it doesn't matter. Um, you can sleep, you can take a walk, you can be in the gym, whatever. The algo is doing what it needs to do.
What it does.
It will be, when people say buy the dip, if you do it manually, it's almost impossible to time it correctly. By the time there are many times where you would like to buy the dip, and by the time um, you're trying to do that, the price already corrected. And you missed it.
And
And you
position
can,
sizing. People forget about position sizing when they say, oh, I'm going to buy the dip. Yeah, but how much are you going to buy?
right,
That needs to be worked out
yeah,
mathematically, right? And
yeah,
that's the other thing. It's not about timing the dip. Well, there's a lot of other factors that come into play. How
right,
much you buy, when you're going to sell it, how you going to hold it for.
yeah. And this does it because it has a logic. It works down this buying down. This DCA, and also it doesn't put you in a bad position. It has a small leverage, so it's where you can actually take advantage, and you really you know you can always buy Bitcoin on a regular basis without paying attention to where we are. But here we are doing something slightly different, right? We are actually using the volatility of Bitcoin to convert it in uh, USDT that then you can use to buy Bitcoin. So
Correct.
it's really amazing. I'm so pleased about this system.
No, it's
Um,
beautiful.
anyway, yeah, let me share my chart. So I have many different ways of plotting the power law, and we I have insisted many times that it's actually fundamental to be able to show different charts, different ways, because there is no one single chart that has all the information. The power law itself is relatively simple when you understand it, but there are a lot of nuances. There are things, particularly if you want to understand the cycles, the deviations from the cycle. There are many different ways of representing these. And the people that follow me, they know that with some level of debate online with other people that are trying to reproduce the power law. I don't want to dwell in these debates, but the bottom line is that there is not one single method. There are different way of representing the power law. So this is one way that is the quantile model. It's not really a model per se. I'm just saying these things most from an educational point of view. Uh, there are many different ways of doing a regression, because basically the idea is this, right? Just to again to explain, this number needs to be updated. I need to do it automatically. It updates here, but it doesn't update it. Um, by the way, if you're interested in this indicator, a little bit of aid, I had here. You have an address where you can find the indicators. Um, but so the idea, right, that is fundamental for understanding the power law is that we have this scaling, right? We have a scaling of a y-axis and the x-axis, and it's revealed by taking the logs. So if you are using as your input the log of time and the log of price, like in this case, and then you want to find some kind of a pattern that is consistent with this input. And there are many different ways of doing it, different methods. There is a Bayesian regression, there is a quantile regression. The quantile regression, I already discussed it. I have videos about this, but basically it's dividing the data in terms of quantiles, right? So you're organizing the deviations from a particular trend that you identify, and then you look at the data in terms of this quantile. So the lowest quantile, once you order, right, you order from the lowest values to the highest value. You're taking, let's say, only 5% of the entire data set, starting from the bottom, right? So when we're talking about, like here in this table, the 0.05 quantile that is only 5%. And it's pretty good because that quantile, the lowest quantile, give us, it's a relatively few data, but it gives us the support line that you see here, this darker line. So it corresponds roughly to the support line. And also it's interesting because all the data, all the quantile below zero point 0.5 can be this, are very consistent. So if you calculate, for example, they give you basically power law. The solution is not obvious from this chart because it's not a log chart. If it was a log chart, what you will see that this line, this darker line, and this blue line, the blue line is actually the zero point 0.5 quantile, and this kind of goes in the middle, right? But it's not. It's different from the more classical type of regression that is called least square regression. That one gives you an average mathematically. The quantile gives you a median. It are slightly different way of thinking about data, right? What how to represent the average data. Um, but the interesting thing that all the quantile in between this bottom and the middle one, up to about zero point 0.5, they are all consistent in terms of slope. They're all straight line with very, very similar slope. In fact, me and Steven, that is the other astrophysicist that does a show with me on Wednesday, we call this region the power law core, because this is where the real power law behavior is super evident. You could eliminate everything else that is above zero point 0.5, and then it will be super clear how consistent and how narrow even the range of data is, because it's really in these green areas, right? That is the core power law behavior. And then it's almost like Bitcoin is bimodal when it goes above it. There are other ways of doing it that don't imply, okay, above or below the zero point 0.5 quantile, but it's kind of close to that. You can use hidden Markov chains and other methods to identify the modes, but there are clear two modes. Now you could even say there is a third mode that is a transition mode between the two modes, but we call it turbulent flow because there are a lot of fast changes, there are big deviations. Um, the distribution of the returns is not symmetric like it is in the green area. It tends to be towards larger values. That is good, right? Because it means that we can achieve large deviations. So it's basically bubble territory. And this is where we are right now, right? So if you are a 0.66, means that we are in the turbulent flow region. Uh, Now, usually the tops corresponds to very, very large deviations, like like top quantiles, like zero point 0.9, for example. This where, and you see also the color coding here, right? So the more red regions in this band, um, and you see all the tops correspond to that, even in the past. Um, Now, the most extreme values we go all the way to 0.95 or uh, 0.99 and so on. But for robust statistic, you want to count more on things like zero point 0.9. These really are extreme values. Um, yeah. So this what this chart shows, that we are kind of where we are supposed to be. We are these turbulent regions. I added to the chart another model, which is this model where I try, I call it the full model. I try to replicate, because so part of the debate that I had with other analysts, like for example Plan C, he likes this quantile model mostly because he thinks it can give us an idea of how big the deviations are without counting on a specific temporal discussion, right? Like, oh, when the peak is going to be, right? These precise oscillations that we see in Bitcoin. He calls it cycle agnostic. I don't think you can do that. It's an illusion because all the information, the way we derive these deviations is based on data that has been very, very cyclic. They have been at very precise cycles. So if you use this information as a way of projecting in the future, you cannot avoid that you have done it on things that are cyclic. So it's still interesting. It's still a way of representing the deviation, but it would be very confusing. Just to give you an example, imagine it's almost like this is my. And sorry if I take these few minutes to describe this, but because this model, a lot of people look at it, I want to explain it a little bit better. Uh, but like imagine, for example, I am here at the bottom, right, and we are at this very lowest quantiles. Well, this model gives you the illusion that anything is possible, anything within this range is possible. That of course maybe because we go, as you go to higher and higher quantile is less likely, right? Because you only have 10% of entire data set that is in these regions. But what is really the probability? Imagine you are here and I ask you this question. In fact, I can ask you guys this question. What do you think is the probability if I am here that tomorrow we go over there in the red region? How big is that probability?
Very small.
Not even very small. I think it's
But
absolute.
tomorrow, it's impossible. Yeah.
Tomorrow, right? Literally tomorrow.
Well, there's a simple answer.
Absolutely.
There's actually a simple answer to this. They need to look at how options are priced because you couldn't even give away an option in that quantile for tomorrow.
Yeah,
It
exactly.
doesn't
Right.
work.
It's almost useless information because
Yeah,
why do I care if I am at the lowest quantile? What with 0.9 quantile is? It's completely meaningless to me. It's useless information at that particular time. I don't care. Yeah, I mean, okay, sure, I can calculate it. Maybe it gives me an idea of a range, but this is what, in fact, we got criticism from people mostly because they don't understand how this works. When they say, "Oh, the power law basically tell us the price can be like when we were here, right? This was 16,000. It can go from 16,000 to 70,000." No, it doesn't, because the power law is very aware of the cycles and where we are in the cycle. So it doesn't. This model, this is what this model does, right? If you take it literally, if you take it at face value, it gives you a possible range of values and it gives you a probability, but the probability doesn't. It's not really a realistic probability, right? If I am at the bottom, the possibility I go to the 0.9 quantile, it's absolutely zero. It doesn't happen. It's very important to understand, right? Because actually, even how we structure a algo, we know that it doesn't jump because it's not. In other words, that will be true if it was a completely stochastic process where Bitcoin was a bunch of dots, right? Imagine it was and some data is like that, right? If you had a bunch of dots, like a little cluster of dots that can be at any moment, at any time, at any place, right? With a certain dispersion. Bitcoin is not like that. There is a history, right, of how the price evolves, uh, and it doesn't jump all of a sudden like that. So it's very important, right? Maybe it seems a trivial discussion, but it's a very important discussion. Uh, in fact, even now that we are at 0.66, it's quite unlikely we jump to zero point 0.9, right? It will take time to go there. But it's a little bit more relevant because we are closer to it. So it's, this is why I add other models like this full model where I actually try to say, listen, there is a pattern in how the price evolves. We have a peak. These peaks have been very regular. They seem to happen every 4 years. They happen in quarter four of this sequence. I'm trying also to catch the bottom. It's one single equation, so it doesn't do a perfect job. I can adjust it to actually catch the real bottom, but it's mostly in terms of shape, right? That we have a cycle. So there is a top, there is a bottom, and there is a top again. And here, I'm trying to reproduce what is going to happen. It's already including a decay of a peak because it seems, if you take at face value how these peaks decay over time, because, and that is the other thing I want to explain very quickly. Many people think that the power law says something specific about a cycle. It doesn't say anything specific. The power law says there are no cycles because they average out, right? The fact that we have a power law, in fact, even here, look at this, right? We go up, we go down. The total result is this blue line. It's like they basically cancel, the bubble cancels. But you can use the power law to calculate the residuals, what are called the residuals. So you measure the difference, and then you study how this residual looks like. And when you look at the residual, it's clear that they decay. And they decay actually not randomly, but with a precise equation. It's a few points because we have only 3 cycles. So you could be dismissive about this pattern, but there is a pattern, right? And it's the only thing we have. So if you want to kind of estimate where that next peak is on the basis of this decay, this is what you get. You get about 200K. And it should happen at the end of the year. Now, are we on the path for that? Yes, right? It's still now, even with this correction, right? Now, of course, if we continue to go down, stay there for a long time, stay there for several weeks, reaching this peak, it becomes more and more difficult, right? But we have discussed this in many episodes of of our analysis. Um, People have dismissed the fact that we have a cycle many times already, but I think it's too early to say that. I don't think so. So I'm not worried. I think we can still reach 200K by the end of the year. It will be interesting. But at this point, to be honest, if we continue to move along the power law, we have a bunch of volatility. The algorithm can continue to multiply our Bitcoin. I don't even care. I'm not. Before, I think I was attached to the cycles mostly because it gives us such incredible opportunity for volatility, right? But you have to worry about getting the peak correctly, because if you want to, let's say, sell some of your Bitcoin and rebuy them back, etc., and then you have to worry about catching the bottom. I don't have to worry anymore with this automated system.
It's funny actually because everyone talks about not selling any of their Bitcoin, and then so none of these cycles really matter then, do they? It's like if you're not going to sell your Bitcoin,
Yeah, why you're even interested in the
why you
cycles?
care if the cycle, if it goes up or down? It's gonna. We all know that if there's a boom, there's going to be a bust, right? This is like the
Yeah,
law of gravity. So if the price goes to 300, 400, 500,000, we all know it's going to correct 50, 60, 70%. And the higher it goes, the more it's going to correct. So
do you
net,
know why? I have a theory about that. I think
so
some people, they start to see this exponential behavior like we had in the past. I think that is going on forever, right? So basically, even when they didn't know about the power law, they thought, well, okay, we grow like this. Now there is this crazy behavior. We are going to continue to do this forever. Now that they know that the power law is there, they think, oh, if we have this crazy exponential behavior, maybe is breaking the power law. Yeah, every time we have this crazy exponential behavior, we do break the power law. But notice what happened. The power law gets restored every single time, right? And so I think it is what happened. They think that we will continue to go exponential forever, but that is not how things work in Bitcoin.
no.
So,
I
well,
think it still looks on track. I don't think there's someone just posted a question. He said the power laws crashed. 200K is impossible. Maybe if you want to go to that one, Giovanni, and cover it.
yeah. Let me see.
We do questions at the end, but we're talking
Yeah,
about.
the question. Let me see. Power law crashed. Cycle peak two. Let's be honest. No need. No, how is crash if we are actually above the power law? How we are crashing? In fact, actually, there are tests that you can do, like the correlation coefficient. I have one of my indicator that calculates the correlation coefficient on a continuous basis. That number is going up. it was 0.95 some time ago. Now it's 0.967 or something. It's actually going up. Again, I think people confuse uh, this full model. The full model is an attempt to say, okay, the power law, basically the power law says there are no cycles. So I don't understand when the people think, oh, because we don't have cycle, the power law is not there. It's the other way around. If there are no cycles, actually the power law is even more evident, right? The way the way you will see that the power law is not followed is two ways. One, we go exponential and we never come back. And two, we break the support line. And neither of these things are happening. If anything, we are actually hovering around the blue line, right? We have noticed how we actually are oscillating around the blue line since last year in a very consistent way. In fact, that is kind of almost the problem that we don't have a bull run, a proper bull run, if we don't break from the power law. Instead, we are too close to the power law. So it's actually the opposite. Now, if you are talking about the full model, well, I explained many times there is a hierarchies of prediction here, right? There is the power law that is the backbone, and that, if anything, is becoming stronger and stronger. And then there is the idea of a cycle that has been true up to now, and I think the equal it will continue to be there. Maybe muted cycles, not as big as before, but they are going to be there. But if you give to the power law hierarchy of prediction 9, this idea of a cycle is maybe like 6, and then there is the idea that the cycles decay over time. That we are observing that through, but maybe that is 5, or you can interchange. You can say the periodicity is third place, and the fact that there is a decay of the peaks is second place. So these are more, you know, details on top of a main theory that says we are following the power law. We're trying to understand the cycles using the power law, but it's not a component of the power law. It's not part of the power law. If you read my theory, my article, I don't know how many people read it, but the entire theory is described it. The understanding of a cycle, it's a corollary, so it's a side discussion. Okay, so I can leave the ground to Marcos, so he can actually go and tell us more about
What's going
the
on
liquidity,
today?
the liquidity chart. Looks
All
like.
right. Let me. Somebody sounds like a.
Hello, Moto.
All
Who's that?
right. somebody's
Spam.
got.
I'm getting a lot of spam.
Somebody's got a gong and a phone.
All right.
All right. Let's get down to business. All right. Once again, we are looking at a standard daily time frame chart, and we are using the futures perpetual derivatives market because Bitcoin runs on not only cycles, but they're intermittent bubbles that are formed by high leverage positions. So, derivatives are an excellent source for price discovery. Wherever you have high leverage positions, those bubbles will pop and the price will it creates volatility and price discovery. And then the spot market through arbitrage catches up as a secondary motion. So, once again, the reason I like to start with this very standard chart that anybody can see, and it goes all the way back to 2024, February 24. So we have uh, two bull movements here. But the thing that I want to highlight is you can't really make sense of this. This can be no matter what you're looking at. If you have a bullish bias, that can look bullish, and if you have a bearish bias, that can look bearish. And everybody's trying to know what is it going to do next. The problem is that even if you're looking at this, you should not be paying attention to that noise. That is noise, and that builds positions on both sides until those positions are harvested. So you really shouldn't be looking at that. What you should use as your foundation and stay out of this noise. This is like a static. If this was a a channel that wasn't on frequency. There's static there. There's noise there. That's like looking at the weather every day, trying to determine what season are we in. It's almost impossible. So what we need to fall back on is the principles, right? What are the principles? The power law. What's another principle? Actual liquidity. Locked in traders that have active positions. That is real. And then you can fall on volume. So we're going to do a little exercise really quick and try to build a thesis of where the market is going based on hard evidence, right? So we'll use the volume first. I'll just come in here and pull a little quick volume profile here. We're going to use a fixed range just to give ourselves a basis here, right? So we have a little range here. I'm just going to drag up a support line really quick. We're going to do this quickly. We'll clone this. We'll put so we have a trading range here based on that. And then we broke out, right? So then we'll do it one more time. We'll make a volume profile here, and then we'll extend it all the way through here, and then we'll do the same thing. We'll clone this, and then we'll establish our range, right? So we're just using past volume to set the range, right? We're not drawing trend lines or tea leaves or anything like that. We're using hard evidence. This is what actually closed. All right, so we can see now it's starting to make a little bit of sense on where the market's going and how it's shaping up, right? But we're missing one other ingredient. We need to see the liquidity to see the impacts of why it broke out of these ranges and which direction it went in. So now we're going to put in the liquidity, and just like magic, we have the x-ray on what's actually happening beneath the scenes. So now when we add the liquidity, we can see that when we got in this range in the last bull run that occurred in March, that consolidation of last year, this consolidation was building this liquidity up, right? Longs and shorts. This is the long side, short side. And all of these traders' positions that are built up over time are getting caught up in the turbulence of all this action here. All this action was going up. They're placing their bets. You've got shorts that are saying it's going to go down. You've got longs that are saying it's going to go up. And this process continues until the liquidity gets to be sufficient. And then boom, it's taken out, right? So my point is, don't get caught up looking at the action in the middle. It's a range. What's really going on beneath that action is the liquidity. Don't become this liquidity. Don't do that. All right, so now let's look at the more current one here that we had, the one that we're in now. So we're building a basis of historical explanation here. So when we got into this new range that we're in now, we've been in it for a few months now. Same process, liquidity is building. So what gets taken out first? They took out the longs first, all the way to early April. Took out all the longs, then we reversed right here. That was a pivot point. You can actually see the pivot between the volume profile, value area low, and this trend line that was formed. That's when it reversed, and they started taking out the shorts. And we're still in that process. That's my point. Everybody should calm down. We're still in the process of taking out this massive amount of liquidity. As long as we don't get caught up in all this action by using our eyes. We don't want to use our eyes. We want to use math. We want to use sound mathematics of what's actually happening. So what's going on currently is we are consolidating after a massive move up. We're in a consolidation pattern now, which is normal. This is still in play. This hasn't gone anywhere. So everybody's, you got people saying the bull market is over and all this and that. We have a point of control here based on heavy volume. So I would not be surprised if the market comes here, tests this, and then starts again. Or we may even drop as low as the value area low, which I doubt that, but it is possible. We've already lost the value area high. So we are now in this volume profile. We've been accepted back into this range now. So when you get accepted back in the range, we might get a retest of this was support, now it's resistance, but this is definitely in play. The point of control. What?
Just to jump in there. So it looks like to me that there's not that much liquidity driving this dip down. What's actually just happened is it looks like there's been an attack by Israel on Tehran.
Not exactly, because remember, we're looking at all the liquidity. I'm getting ready
Yep.
to start backing it out. The next thing I was going to say is, what is the fuel
Yeah.
to bring it down here, right? So we're looking at basically three through a 3x lens. So now I'm going to start to go back to my high leverage positions of 25, and now
There you
you
go.
can get more clarity on what is actually happening locally, right? So that's what we're doing. We're getting local now. So now we can see that the market does the same thing, it just does it differently. It gives you a lot of head fakes, it gives you a lot of action that pulls your eye in and it fakes you out. That's why you shouldn't look at it. You should just use sound principles. So what happened here, we were already in the process of taking out this pool. But what does the market do? It doesn't complete it. It reverses hard in the other direction. And what does that do? That sucks in all this new intermittent internal liquidity that chase that move. But really, we had unfinished business that we never mitigated. It was never finished. This little move up just pulled in all types of traders looking at that. And this still never was mitigated or liquidated. It was still always in play. And now we're more than likely, the probabilities are that we will finish what we started. And then that puts you right here to use the point of control as support to get your bounce. Now
So
there's other pools down here, but these are much, much deeper. And it's going to take a while to get there if we do get there.
so what was missing on the top bit, but at that 110K price was a bridge between the liquidity that was much higher, right? And that's where it sort of tapped out, and now it's gone back down to chase what was left.
What happened here is when we were coming up to begin with, we didn't have any liquidity up here. The price stopped, right? The price needs fuel. Remember, 25x is more juicy than 10 and 5 and 3. This is more
Yeah.
lucrative. So the 25, we didn't have 25 here at this particular time. So what does the
Yeah.
market do? It checks up and starts creating that bridge. So it's building that next layer of 25. However, it's important to understand that this is level liquidity. This stuff in here is internal liquidity. Level is usually last to go. So reason I'm distinguishing the two is because level liquidity, like you had level liquidity here, it lasts a long time before it's mitigated. Level liquidity, level, level does not get liquidated or mitigated quickly. Internal liquidity, this stuff in here, that's internal. This is noise. All that gets taken out. But that level, those levels last. So here's a level. These are levels. So based on level liquidity, based on level liquidity lasting a long time, these may survive the correction because they this might get taken out in the bear market. But this one is in play because it's already in play. This one needs to be finished. And if you can tell, the market is very, very picky about being balanced and finishing what it starts. So it started taking this one out. It gave us a big head fake to suck everybody in, but now it's coming back to finish it. And then we have this major support level here. So we just might be done when we get to this point of control.
96.
Which is at 96.5. Yeah. Yeah,
Interesting.
because we are in a bull market, right? So the point of control would be almost a 50% from the of the move, just a little bit less than 50% of the move. So that might be all we need to do to get back on track. Yeah.
Yeah, and it's interesting. There's a bit of news. That's what I was saying. There's a bit of news that's kind of created a little bit of the stress today. It's gonna be interesting how that might just be the what everyone's distracted by, and the liquidity is what really tells the story. The story was there before the news, right? That's what's so interesting. That
right.
it's like
The news always seems to sync up with what's actually happening with the liquidity.
Yeah.
The news just it's kind of like that's what I was warning everybody with to begin with. Don't get caught up in this. You can't make the best traders in the world can't make sense of that. If you got a bullish bias, you're looking at bullish news, it looks bullish. If you got a bearish bias, you look at bearish news, it gets bearish. The only thing that you can depend on is the power law, which is math, and the actual liquidity. That's what's going to determine what's going to happen.
So the question is, do we have a bigger chance right now when we get out of this range to get to 115 or higher, or to 90K? Looking at this, the way we're looking at it, that 90K is the next point.
Yeah, the probabilities are we finish what we started and we come down here to this volume profile, because the reason that even though we don't have specific liquidity to take us directly there, There is a gap here, but the market
Yeah,
can
that's what
check.
I'm
The
looking
market can
at.
check up and build the liquidity that it needs. This is so close, and this is such a high volume node right here. It's like a magnet. So the price, it might not stay there very long, but you might get a little quick wick. But it's pretty much going to. There's a high probability it's going to tap that level. Just tap it. Maybe it stays there. Maybe it doesn't, and reverses off of there. But let's look at the big picture again. Once again, we don't want to get too fractal or too caught up in the price action, current price action. The point is, no matter what's going on here, which we don't know exactly how it's going to move, we do know that the probabilities are extremely high that gets mitigated in the near term. So until that changes, that's still on the table. It can do all types of things that make you think it's not going to do that, but that's what happens. That's how this works. And then we can assess what happens once we get up here. Then we can make a determination on where we go next. But this is high probability stuff. And you can see a tremendous amount of liquidity here. The market, there's almost, I don't like to say certainty, but there's a high probability the market is not going to go into a bear market and let all these positions make just a fortune in profit. It's not going to work like that. It's not going to happen. These people are going to get liquidated.
Yeah, that's what people forget, that this is a business. The price is being controlled by the market makers, and if they let those things sit, you're letting basically 25x leverage positions make millions of dollars. And it's just, it doesn't happen. And
they're liquidate that.
Yeah, Giovanni, what do you think?
I think he's on mute, right?
If you're talking,
yeah, he's on mute. But yeah,
I think I muted myself.
Yeah.
But I was saying, So for people who say, is it still possible that we reach 200K by the end of the year? I mean, people forget how explosive Bitcoin can be.
It can move super fast. Yeah. Yes.
In fact, that is more typical than anything else. You have it actually doesn't look like from a graph like this, but if I plot, if I zoom in with the power law, in this time when it looks flat, it actually follows the power law. It looks flat because the power law looks like a pattern that goes up over a relatively long period of time. But to follow in average the power law, Bitcoin needs to do a lot of, this is what I say, Bitcoin needs to do a lot of power law things. Most of the time actually is moving along the power law, just different layers, and then it explodes and it goes to the next level. So right now it doesn't look anything impossible, right?
Just my little crayons here.
Yeah.
Once we take this level here out, we're going to establish a new price level, right? Mm-hmm. A new zone.
Right.
And yeah, it's going to build up liquidity. You're still on track for first year, November, December.
Still on track.
Yeah, we can get there.
And once again, it's done the unexpected, right?
Yeah, I mean, what do you think these people thought right here? Look at this violent move. Let me get this out of the way. Let's back this off. I mean, what if you were on the wrong side of that? Look how violent that is. That's tremendous. That's straight up. So it can move very, very fast. After, what did it do? Lull everybody to sleep, made everybody think it wasn't going to happen, and boom, it just took everything out.
Yeah, I remember watching that. People forget. I remember watching that end of last year, and it was just like going every day. It was up 1,000, 2,000, non-stop for 2 weeks.
So and somebody's commenting, I'm throwing the towel. I will just use 20 pair leverage. Don't
do that.
So instead of using 20 pair, use something like our system. And I know it seems we are pushing this thing, but if you are we actually made a bunch of posts, right? On that guy, what is his name? I don't remember.
Name's Win.
That he was using 40 pair leverage, right? And he lost everything.
And guess what?
That is stupid, because the difference between using a little bit of a leverage, because Bitcoin doesn't have a volatility it had 10 years ago. So using a little bit of leverage is clever, but
do you want to be
in such a way where
you
can build up your position, right?
Do Do you want to
Yeah.
be this close to the price with 25x leverage?
Yeah.
You want to be that close? Or it can just come down and take you out or come up and take you out quick. That's how
Yeah.
close you're going to be with 20. You're going to use 25x leverage. You're in these two pools. These are all the people that are doing that. You want to join those
Right.
folks? I don't want to be there.
Yeah.
And here's what's so deviant about it, right? This is what's so impressive about it, right? It got all of them. It got all of them. You had these people saying, "Oh, it's going up. Let me jump in here and go long on 25x." Then you had all these people say, "Oh, it's going down. Let me jump in here and go short." And what does it do? It terminates both sides. Got
Mhm.
all of them wiped out. So
Yeah.
don't use
No,
high leverage trading. It's too close.
it's more important consistency, right? So if you have a
Yeah,
system that consistently makes money and you can use
yeah,
it to buy more
yeah.
Bitcoin, and
Sleep
it
at
does it
night.
when
Yeah,
the market
correct.
goes up, when the market goes down, that is the real approach. And trying to do these things manually, you can do it for some time, like this guy, right? He even built $100 million position, all right, but it was like winning the lottery,
He
right?
gave it
I
all
don't think there
back.
is a real skill there.
Yeah.
Kind of almost anybody can do it if you are on the right side of a trade, and then by selection you think, oh, this person is the best trader in the world. He will not be. If he was the best trader of the world, he will still have that money. He lost it all, right? So
And,
he's not
and
the
and
best
I can
trader of the
hear
world.
the people saying that, hey, I'll get in here and then I'll sell it here, or the people saying I'll short it here and I'll sell it here, right? The problem that they're not understanding is the people that are in these two sides are making bets in here where it's the most choppy. They're taking positions here. Their liquidation levels are on the edges, right? So what happens is when the market makes just a tiny move against them, they're in drawdown. And everybody in this call should understand that when you're in drawdown, you can't close the position. You're going to stay there, and the more you get in drawdown, the more you don't want to close it, the more you're praying and hoping and staying married to the position. You can close it, but you're going to give the market some money or a lot of money, but you're going to walk away with less money in your account. So it's not like, oh, I'll just buy it here and I'll sell it up there. The minute the market you buy in and the market moves just a little bit against you, you're already in drawdown. So there's a 90% chance you're not going anywhere. And the more it moves away against you, the deeper in drawdown you get, and you go through this psychological process of just like a moth to the flame, you're going to get liquidated or lose a lot of money. Either way, it doesn't matter. It's going to get you. So just want to make that clear to those thinking, well, I can do it better. I can beat this. Can't beat it. That's why it works. That's why
Well, yeah,
97% lose. Yep. Can't beat
Right.
it. You got to do the same game.
you do the same game. And we
Same
saw
game.
the algorithm at the start of the call that it's playing the same game.
Yeah. Check this out. You want to see something cool? Since unless
Yeah,
somebody else has something else they want to share.
I like cool things.
No, go ahead.
Let me show you just based on what Costa was showing. I'm going to pull up the algorithm again myself here. Um, let
Yeah,
me
tell me
uh,
what.
let me load it up here. I'm loading it up. Let's go 0, 1, 5, 0. All right. So I'm gonna. Can you see? Is that sharing? Yes, it is. Good. So let me put the algo in here really quick. I'm just gonna pull up a different version. I already have it loaded here. All right. So basically, the algorithm, just like Costa was saying, it terminated all of this move down here. It caught it perfectly, right? Everybody can see that. There's a the reason it did that. There was a liquidity pool here that got terminated. But look how the algorithm trades in concert with the pool. So we're doing the same thing that the market makers algorithms are doing, right? It's waiting until the liquidation event happens and then it gets in, right? So just keep that in mind. And I'm gonna drill down to the similar time frame here so you can see it. We're just gonna look at the 15-minute, and you're going to see the same type of action, right? You can see the liquidity right here. This is just a 15-minute, but if the market's fractal, it does the same thing on all time frames. So what does the algorithm do? Just like the market makers, when they take the liquidity, what does the algorithm do? Same
Yeah,
thing. It
yeah,
trades with them, not against them. That's the difference. They have algorithms, we have an algorithm. So the
that's
algorithm
right.
waits until a
You're,
liquidity event
you're
occurs.
going.
takes a
It's
position.
like going with the flow, going with the flow.
With it in concert with them. Here they are right here. The algorithms take all this liquidity out, and we're taking positions with the algorithm, with the market makers, not
Yeah.
against them. So I just wanted to highlight that.
And that again is almost impossible to do by
Oh,
hand.
you do it yourself. You can't stay awake enough hours in the day, and you don't have the psychological fortitude to do that. What people make the mistake people make is, oh, that's easy. I'll just get in here and sell it over here. It doesn't work that way when you
And
don't know what's going to happen next.
I tried, I tried. There was a
Doesn't
period of
work.
time where I will wake up because here in California, it's actually 6 in the morning when the market's open. I will wake
Yep.
up 6, and I am a night person. I
Yep.
spent like 3 or 4 months doing that life. Every single day I will wake up early and be ready, etc. And I did some money, but if I went and worked at McDonald's, it would have been probably better.
I mean,
Because
these
I was
algorithms
fighting.
are 90. They're 95% of all the trading volume. You can't beat them. There's
Yeah.
tens of thousands of them. They're trading at all different time frames. We're looking at the 15. They're on the 1 minute, the 5 minute, the 1 hour, the 30 minute, the 5 second, the 1 second, the nanosecond. They're on all the time frames. You're not going to beat this game unless you play like them. That's the only way to beat it.
Yeah.
So that's all I got for this
If
right now.
somebody's saying TradeFi just destroy Bitcoin and made it just another boring asset like bonds to call the volatility out of it. I don't think so. I think actually Bitcoin, what is happening is that if anything, we don't have maybe these huge big bubbles, but that was kind of predictable, right? Remember, there is a decay, and you could even predict, because even if let's say we went to 200K, right? Maybe we don't go to a 200K, but let's say we went to 200K. It's still nothing in comparison with the 10, 12 pair that we had in the first cycles. And that was happening before the institution comes in. And they were institutional all the time. They were big funds that bought, Pantera Capital, for example, that bought a bunch of Bitcoin early on. So has been always something that is there. What is happening is that now you have, in my opinion, and let's see what everybody else thinks, you have a best of both worlds. You have the idea that Bitcoin is following the power law in a very consistent way. You know where it's going. You're seeing that it's like when you drive, right? And you can see the path ahead, where you're going. And at the same time, there is a lot of volatility that it requires more intelligence, right? It requires more tools like our algorithm, but the volatility is real if you know how to use it. These corrections, 5, 6, 7, 10%. If you use them consistently, you can. Right now, for example, I calculated with our trading system, Bitcoin is about 45%, right? Returns. Well, we do more than double because we get both exposure to Bitcoin and actually some returns that are actually bigger than what Bitcoin does itself. I say that I was going to calculate the typical returns that we get, what that is equivalent in terms of Bitcoin history, right? Is it what Bitcoin was doing 2 years ago, 3 years ago? I need to calculate that. But basically, it's almost like you're going back in time. And if you add some tools to and this is also what many other players are realizing, right? MicroStrategy is providing a service to the market, to the stock market, to expose basically the regular market, the TradeFi markets to Bitcoin volatility. There are MSTY, they are using options. There are a lot of people that realize, okay, now the Bitcoin is stable in the sense that it's not going to zero. How can we use its volatility, this a lot of, turbulence and energy to actually create some leverage, right? To create some kind of income out of Bitcoin volatility. So
there's
you
some
have to be
other good
clever.
there's some other
You have
good questions we need to get to.
Yeah, and just to add to that, it's like it's a pretty, it's a pretty basic concept. If you have something and then you use a powerful tool, you're going to become more efficient. You're going to do things better, faster, more powerfully, right? If you're just holding a spot position, that's fine, but you're not actually using any tool. We're giving you the equivalent of an electric drill or a supercharged engine. Of course, you're going to get better performance, right? You're applying technology to what you're doing, just like anything in the world. If you use a computer, you go faster. If you use a, engine, it makes you go quicker, right? Why wouldn't using a trading system get you better returns? We've got a question here. Actually, I'll jump into this one, and then maybe Marcus can
I
add.
want to take a shot at that one too.
Yeah. So there's some good ones here. So firstly, like talking about tools, these are two different things, right? So sometimes you need a hammer, sometimes you need a drill, right? So pick what you need when you need it. Secondly, put options are fantastic, but they are still discretionary trades, and they do have time expiries. So you can buy put options; they can expire without you going into the money, and they expire worthless. So firstly, right, doesn't mean don't do put options, because if you nail them, you will make a lot of money. They're basically like a highly leveraged position that has a cap downside. So put options are fantastic, but it's a discretionary trade and it can expire worthless. The thing about Minotaur is, yes, we have a cycle. We believe there's going to be a cycle. It's going to continue. It doesn't matter. Minotaur is going to make money. The system will make money whether we have a cycle or not. The market goes up, down, sideways. It's going to keep making money. So what you're getting is you're getting something that has no time expiry. You're having something that has no directional bias either, that can make money when it goes up, and it can make money when it goes down, and it makes money 24/7. So again, two different things. A put option is a fantastic thing to do at the top of the cycle. I'll probably buy some put options, but you have to understand it's still a discretionary trade, and you can lose everything you put into it if it doesn't expire in the money. So again, different tools for different activities. But I would put a lot more money on the Minotaur trading system than I would buying put options.
Yeah, and one doesn't exclude the other, right? So put option is I almost think it as an insurance policy. So when we are close, and one of the reasons why we do this every week is because the market is dynamic, right? We are offering a service, we're analyzing the market as we come close to the date. Let's say we do see some explosive move to 130, 140, when we actually come close to 200, and we use the quantile, all the other indicators. We have like 15 different indicators, and everything converges. You will never use only one indicator. We have 15 different indicators, many different, these beautiful liquidity charts, and we see with the global liquidity too, we see that there are a lot of signs that the market will correct. Then this is when you want to create some insurance policy, right? And buying a put option, it's a good insurance policy, because if a market maybe put like you invest, and we can discuss it, we can go into detail, we can give you some examples. It's premature right now. We are not very close there, but when that will come, we'll give you some. I will discuss, for example, what I do, because we cannot give financial advice, but I will tell you how I'm thinking about that. I will open some put options. I will put a few $1,000s in it, because if a market corrects, like it has done in the past, then you can recover almost all what you lost. Because, if one way of thinking about the market is when Bitcoin is 200K and there is a correction to 100K, I know that people say one Bitcoin is one Bitcoin, but this, one Bitcoin that is worth 100K is different from a Bitcoin that is worth 200K. You should admit that. Also, because if you like Bitcoin and you do something to protect your Bitcoin, now you can buy more Bitcoin at the bottom, right? So you want to be flexible. These are almost religious statements like hodling at any cost. They never bring you too far, right? So, but there are two different things. These are doing these particular actions that we do at the bottom. At the bottom, when we are at the bottom, believe me, we will let you know. And you should really sell all your shares at home. You should sell everything and buy Bitcoin. That is the right moment to do that. But these are things that you do once in a while, and you can do in addition to what the bot is doing, because the bot is working 24/7.
Let me take a shot at him, Giovanni. Okay.
Yeah.
I see, Owen. That's a good question. You got multiple sub questions within a question. Let's quickly unpack what you're saying. You're saying, what is the upside of doing trades on the daily time frame versus the monthly? Well, first of all, the daily time frame is fractal to the monthly by a considerable amount, right? It's multiples of 30 times faster However, if you're trading on a monthly, that's incredibly slow. It's very, very few people have the discipline to do that. But the daily is going to give you more action, obviously. So that's that one. You can trade on a monthly. It's probably safer if you have the patience to do it. It's going to take you're only going to get 12 candles a year, so it's going to take the patience of Job to do that. So then the next one you said making a typical trade using Minotaur versus put options. One thing I want to clarify is it's kind of like Casa was saying, you have to have the right tool to do the job, and then you have to have the right competence to operate the tool. So you got to understand that you're mixing multiple disciplines together, right? If you're going to be an options trader, that's a different type of discipline. And if you're going to be a futures trader or a spot trader, you kind of need to kind of focus on one primary asset type as your foundation, and then you can start to speculate or use other ones. But the big danger is you're trying to do options and futures and spot, and you're mixing all that together. That's a recipe for losing your money. Like Giovanni said that you can think of options as insurance. They're good to think of it that way, but it's very critical that you need to have something to insure. You don't make money with options. Options are a derivative that protects your asset, right? So the Minotaur trading system is working your asset and working off your assets. So that's a good foundation system. And then you can take some of the profits from your algorithm trading and buy protective insurance put options. So insurance is a derivative of something that it's insuring. So just use your put options to protect your algo system or whatever it is you're doing. But I definitely wouldn't be trying to use the options as a primary way to make money unless you're very, very experienced. So I just wanted to clarify that.
And then we have these. I think I understand what they are saying, but you guys want to deal with this question?
Just had a call with Minotaur last week. My plan is to sell my ETF BTC once it reaches 200K so I can rebuy actual BTC and get the Minotaur system. Okay. All right, Costa, you take a shot at that. He wants to pay for it. What was that? All right.
Nice, but plans. Yeah, so it's up to you. Join the program when you think it's ready. The good thing about having it now is that you get the upside from now, no matter what happens. So again, it really comes back to the Minotaur giving you the ability to become cycle agnostic, even if you're not like us, right? We believe in the cycles because it just makes sense to us that cycles will continue at least the next one or two. But my algorithm doesn't care what happens with the cycles or not. It's just gonna use the volatility to generate returns, right? So if you want to wait, everyone's in a different position. There's no rush. We're not going anywhere. So, that's the question is, when you're ready, we'll be ready for you.
Yeah.
But I want to say in general, right? You need, this system is not for somebody that is starting and it has a relatively little Bitcoin, because it's something for a more mature investor, right? You don't want to do something crazy like selling your car to buy the system or whatever, or sell a bunch of your Bitcoin to buy the system. It should be where you are in a comfortable position to do this, in general, investing is like that, right? So that is different from DCA and Bitcoin. This is what every student, every young people I meet, to say, please put $100, and I don't get anything out of that, right? Because I want people to be free, and that is different, right? Maybe it takes you a few years to arrive to a point where you want to do something more sophisticated, So not because we're talking about all these benefits from the system that we created because we think there is value behind it. You should do a huge sacrifice to get it, right? It's something where you want to do it in a position of strength. Do you agree, Costa, on this?
Yeah, I agree. I think anything you do in this is, at the end of the day, this is still digital currencies, right? Don't put your life savings into something just do the smart thing. I agree. If it's going to cause you any kind of emotional stress, don't do it. But that's like anything in life, Don't date someone that's going to cause you emotional stress. Don't go somewhere if it's going to cause you stress. You can't use fiat directly, but you can use USDT if that's kind of the same thing or not. I don't know. For that last question.
Yeah, yes, in my case, I like what really attracted me to this system is basically doesn't force me to sell my BTC, because my long-term goal is to get more BTC. So I hold my BTC, I use them as a collateral, I get USDT, I convert it immediately to Bitcoin, I get more Bitcoin. But in theory, it could be used just to have an income if you want, right? Put fiat in trades, and it produces a flow, a steady flow of gains that you can use to pay bills or whatever else. So it's agnostic in that case.
Yeah, and it makes these boring periods fun because they're not that boring and something's happening all the
Right,
time.
exactly.
Yeah.
Awesome.
Anyway, yeah, thank you. E pur si muove. This is actually it should be my motto.
Thank you guys for the questions
uh,
and everything.
What's that mean? A pussy more.
It means and yet it moves. Is what when they force Galileo to basically claim that he was wrong. The church forced him
Yeah.
to do that, otherwise he will have been killed. He say, okay, yeah, sure, yeah, the Earth is the center of the universe. Then when he came out, he got upset. He said, "Vaffanculo, some Italian bad word." E pur si muove, and yet it moves. The truth is the truth. Math is math. That is what it means.
Oh, nice. She got that tattoo in Vegas.
I will make it. I should make a tattoo. I should.
Tattoo in Vegas.
Awesome. Yeah. Hey. End of the day, I'm rolling with the math. You can speculate. I'll stick with
That's
the
right.
math.
Thank you, guys. Thank you, everybody.
You're
We will
welcome.
see you next week. Let's see what happens.
All right.
All right. Bye, everybody.
Bye.